Coming from a middle class background, I decided to opt for taking a student loan to fund my education. When I was taking the student loan, I had no clue about the terminologies involved. I was so desperate about meeting the university's deadline to pay the fees that I didn't even read the contract and just signed it, which is not at all advisable. But now I know all the ins and outs about taking a student loan and how to pay it off back. And in this video, I'll be covering all the 9 terms that are involved while taking a student loan, which you should know. So by the end of this video, you'll be equipped by all the knowledge involved in taking a student loan. Let's get started. But before we start, I'm Tanmay, a full-time data analyst and a part-time YouTuber living in Ireland. On this channel, I share videos about tips and tricks that makes your moving abroad journey smoother and help you build a better life in your 20s by sharing my personal insights, productivity hacks. If that sounds good, let's dive in. First up, interest rates. It's a no-brainer that you know about interest rates should be as low as possible, and interest rate is basically something if you're taking a principal amount or a loan, let's say of 25 lakhs, then you have to pay an interest amount every year, which is 12% or 11% depending on the bank you're choosing, or is it a collateral or non-collateral loan. But I'm not going to talk about interest rate. To be specific, there is something which is called as the repo rate. The repo rate is basically the rate at which the RBI, the Reserve Bank of India, gives loans to the bank, and then the banks give loan to you. Now, why is this information important to you is because since 2 years, the repo rate has been the same, which is 6.50. And if you're negotiating the interest rate, then you can bring this point up that but the repo rates are same, because maybe the bank will say, you know what, the repo rates are higher and all that, so we have a higher interest rate. Which is true. From 2020, the repo rate has increased, but since 2 years, it has been the same. So at least you have that knowledge that, okay, it hasn't been changed, and then you can negotiate on that terms. Plus, there is one more thing which you need to know is called flexible interest rates as well as fixed interest rate. So if the this repo rate keeps on fluctuating based on the inflation and other factors. So if there is more money in the market, the repo rate increases. If there is less money, it decreases. If the repo rate increases and you have a flexible interest rate, then the bank will also increase their interest rate because they want to make the profits as well, and which eventually comes down to us that we have to pay more. So to give you an example, my interest rate started from 11.30, but because the repo rate increased in 2021-2022, it became 12.75 at the moment. Now if in future the repo rate decreases, then my interest rate will decrease as well. So this is a flexible interest rate. That's how it works. And then there is another flip side, which is a fixed interest rate, which is if I would have chosen the fixed interest rate, then the 11.30 or 11.50 would have been intact no matter the repo rate is going up or down. Let's move forward to the second thing, which is collateral and co-signer. So these are two different terms. Collateral is basically if you are keeping a property or something in exchange for the loan amount which you are taking. So for example, in most of the cases, it's a real estate property or a house or shop or bungalow or something. So let's say you are taking a 25 lakhs loan, then your house, which would cost around same price 35 lakhs or 45 lakhs is kept as a collateral, so that if by any chance, God forbid it won't happen, but by any chance you are unable to pay back the loan, then that house then goes to the bank. So the bank will own that property basically. That's how the collateral thing works. The benefit here is if you have something as collateral, then the interest rate is significantly lower, could be around 9-10%. But if you don't have a non-collateral, in our case, most of us, like in my case, I come from a middle class background, so I don't have a real estate which I can put down as a collateral. So I took non-collateral loan, hence my interest rates are slightly higher. But if you have something, then you can opt for that. Now next is co-signer. Co-signer is someone who guarantees that you, means the primary borrower. Now in this video, I'll be using the terms as borrower and lender. So consider borrower is us, who is taking the loan from the lender. Lender could be bank, NBFCs, or any financing institute from whom you're taking the loan. So co-signer is someone who guarantees that the primary borrower, that me, will pay off the loan. And if at all this doesn't happen, then it's the co-signer's responsibility to pay off the loan back. Now, if the primary borrower, if I forgot to pay the payment or there are any defaults, then it will impact the co-signer's credit score as well. But a plus side on this is if the co-signer's credit score is really good, then you can negotiate for a lower interest rate. Usually banks need a co-signer because I was a student, like most of us are student or just 1 year, 2 year down the line. So we don't have built up a very good credit score, or we have a very poor or not negligible credit score. Hence we need a co-signer who has a good score, who can guarantee that. Okay, usually in this scenario it is your parent or any very close relatives, so that's it. But also make sure there is a caveat with that, which is if you default, their credit score will be harmed. By the way, here's a quick thing. If you're watching this video before 2nd of February 2025, then I'm hosting a live workshop. It's more like a show and tell workshop about AI, how you can use AI in your daily routine, like right from planning the diet, planning the workout schedule, applying for jobs, or even major things like content creation, writing the script, writing an email, upskilling, or even figuring out what you want from your life, getting the exact prompt from ChatGPT and then using them. So link is in the description. Trust me, it will be worth it. Sign up for it. It is a paid one, but if you feel at some point that it is not satisfactory, it has 100% refund policy. You can drop us an email and I'll be happy to make a refund. But trust me, it will be worth it. Link is in the description. Check it out. Now things are getting interesting, which is sanction amount and disbursement amount. These two are different amounts. People often confuse themselves with this. So sanction amount can also be stated as the principal amount. Let's say you plan to take a 25 lakhs loan, but with all the bank charges, processing fees and the insurance, in my case it went to 26 lakh 70,000. So 1 lakh 70,000 was the charges for a bank charges, processing fee and the insurance. Now you have taken the loan of 26 lakh 70,000, but the disbursement amount is only 25 lakhs because the rest amount is usually your charges and processing fee and the insurance fee. Now the insurance is just to make sure that if anything God forbid happened to me, then the co-signer doesn't have to pay anything. It's ensured that the loan will be paid off. Hence the disbursement amount is often less to the sanction amount. So don't be confused when you see a certain amount on the sanction letter, but you see that you can only disburse certain amount. But while paying off, you have to pay the sanctioned amount, which is the principal amount, which is 26 lakh 70,000 and not just the 25 lakhs. Now, once you have the sanctioned amount, now you have to pay the fees. So you will take a disbursement of certain amount. Let's say your fees is 20 lakhs and you have to pay 50% of the fees. Then you take a disbursement of 10 lakhs. Highly recommended, don't take the complete disbursement because then interest will start accumulating on the disbursed amount and not the sanctioned amount. So make sure that you are taking only whatever is required and keep the rest as a sanctioned amount. But there are two things which are applied on this amount, which is called a lien, which you then have to release a lien. I'll just give you an example. If you're taking a collateral loan, then your property is locked in with the bank. Now once you pay off that loan, then that property is unlocked or released. That thing is the blocking of the property is called lien. But in terms of student loan, the amount that has been approved in your case, like the disbursement amount which is there in your account, you can only use that account for educational purposes. Hence that amount is liened. So you have to show the proof that this amount is being used to pay the fee, to do the travel expenses, education travel expenses, to buy something like MacBook, like educational laptop. So you have to make sure that you have all the receipts and you give them the proof that all the amount has been used as educational purposes only. Let's move on to the fifth thing, which is moratorium period. Finally, I got to spell it right. Whenever you are taking a loan, you might have heard of this thing called, your EMI payments will start after 2 years. You're taking a loan in 2024, but the EMI will start in 2026. So this 2 years is called the moratorium period, where you don't have to pay any EMI, but be cautious that the interest will still accumulate. Next up, partial interest payment and part payments. So as I mentioned that the interest will still be accumulated on the principal amount, which is 25 lakhs or whatever in your case, but there's something called partial interest payment. So what you can do is you can just make, so let's say in a year on 25 lakhs, you get 2.5 lakhs of interest. So you can divide that into 12 and then every month you can make a 10 to 12,000 rupees payment every month, so that interest will be paid off using this partial interest thing. And in the end, your principal amount will be same as what it was before. Basically, that interest will not get accumulated at the end of 2 years because you're paying it off in terms of partial payments. But it is different than making a part payment. Next point, part payments. Part payment is different than EMI and partial interest payments. When you make a part payment, it is basically, let's say you have an ongoing EMI, you had some promotion or you had an income about 1 lakh or 2 lakh, then you can straight away pay as a part payment and that amount will be deducted from your principal amount. So if let's say you are doing EMI and the loan amount is down to 23 lakhs, and let's say you made a part payment of 3 lakhs irrespective of the EMI, then your principal amount will be now 20 lakhs. So you only have to pay 20 lakhs back to the bank. The beauty of this is it reduces the number of EMIs, it reduces the loan tenure, as well as it will reduce the interest rate contribution. The more the principal amount value decreases, the more your EMI makes contribution towards the principal amount. So if give you again an example, if your loan is now down to 15 lakhs and you're paying a 45,000 EMI, then rather than contributing 35,000 towards the interest, it will be vice versa, which is now 35,000 will be deducted from your principal amount, and the rest 15,000 will go towards the rest 10,000 will go towards the interest payments. And that's how it works. Hence, it is recommended in the initial stages, try to make as many part payments as you can, save as much you can, and then make the part payments. Next up, partial interest payments and EMIs. These two are two different things. So EMI, as you know or might know, is every month you have to make a payment जिसमें से principal will be deducted and the interest will be paid. Let's say you are paying an EMI of 45,000 rupees for a 25 lakh loan, then out of that 30,000 will go towards your principal amount and the rest 15,000 will go towards the interest payment, because you have 12.75 of interest. In the initial stages, maximum amount which you pay as an EMI goes towards interest payments. What I told is kinda vice versa. So like 30,000 will go towards interest and 15,000 towards the principal amount. Next is the repayment schedule. In that, the name itself suggests repayment schedule. Basically, it's a PDF where all the details are given, like your loan amount, your moratorium period, what is the loan getting accumulated, how much, when will the EMI start, how much EMI you are paying, what is the actual loan amount you paid back, how much is the interest you paid back. So let's say if the loan tenure is basically how long you have taken the loan for. Usually student loans are usually 8 years long. So let's say 25 lakhs for 8 years you are taking a student loan, and you decide to just keep on paying the EMIs and not making any part payments. Then at the end of 8th year you would be making around 40 lakhs payment to the bank, which is extra 15 lakhs extra which you're paying in terms of interest. Hence, it is highly recommended to make a part payment. Whenever you have the savings, just make the part payment so that you pay less to the bank and then invest that and do whatever you want, or just go on a vacation. Let's move to the last point, 9th point, foreclosure charges. Foreclosure charges is basically, let's say your loan is 8 years of tenure, which in case of student loan it is most of the times. If let's say you got some money and because you were earning well, you got promoted and all that, you got a major chunk of 15 lakh rupees and you only had 15 lakhs to pay off by paying the EMI and everything, it is down to 15 lakhs. So what you can do is you can pay off right away. That is called foreclosure. Basically, you're closing the loan beforehand. So some banks have conditions on this foreclosure that if you're doing a foreclosure, then you have to pay 1 lakh extra or 2 lakh extra. Usually this shouldn't be the case, and it is not the case in terms of student loans, but still it is good for us to know that it is there in the contract, and the foreclosure charges are 0. So that's all the 9 things which you need to know while taking a student loan. If you like this video, then you would love this video here, which talks about the mistakes I made and which you can avoid, of course, while choosing the right bank, while signing the contract, while taking the disbursement, and while paying it off back. Trust me, this video will save you 1 to 2 lakhs, if not more than that. So make sure you click on this one and watch that. Thank you.